Well, good afternoon. Time to have a look at the market's performance. A bit of a mixed one when it comes to the Asian side, as many of the global concerns continue to plague investors. We did see a bit of an advance following President Joe Biden's comments that the Chinese tariffs that were imposed by the Trump administration are under consideration. Nonetheless, we saw a climb in European markets despite the fears about global growth. As we look at the performing at the indices, individually, German DAX up 0.5%. The FTSE 100 up 0.9%, and the French CAC in positive territory, also up 0.1%. Locally, we did get some interim numbers from the likes of Barloworld, Netcare, as well as Discam, and trading statements out of Alexander Forbes and Advicta. To talk to us about how some of the events we can expect as we kick off the week and some of the market dynamics playing out right now, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. So let's look at JSE performance right now, given some of the activity we're seeing and the green across Europe.
Yeah, so we're certainly following the rest of Europe higher, which is very, very positive, given the horrendous slide that we've seen in the first 3 months of this year. I think the only dark spot in Europe today was Spain, was down slightly, but we're really being driven by our resource index. We're seeing some of the platinum miners moving up aggressively. On the downside, as you mentioned, China was under pressure this morning, so we're seeing the Naspers process pair, at least if you want to call it that, down fairly significantly. That's taking a little bit of a shine off the industrials, but it's about resources, it's about financials, and it's heading higher. We're also getting a little bit of positivity in the local currency as well. I think you can see it behind us, down to 15.68 to the US dollar, and that's, I think, after S&P upgraded our outlook to positive. So a little bit of good news for currency traders this morning.
So given the fact that we've had, I suppose, call it a horrendous couple of weeks with the sell-off, some might believe that this is the last leg of what is the worst, or are you also anticipating the fact that perhaps not even the last leg, we're entering a new phase of what could be coming around the corner?
Well, I think first it's very important to understand that no one knows in the short term where the bottom is going to be. I mean, there's all sorts of sayings about that on trading desks, trying to pick bottoms, but because you can't tell where it's going to be, you need to kind of try and look at the relative valuations. You've got to look at many different factors. Now, if you look at it purely in terms of earnings, in terms of like if you take a long-term history, we're not particularly cheap. So there definitely could be further downside. That said, you just get the sense that from a sentiment point of view, that this is very different from the sell-off that we saw in 2020, which was a knee-jerk, panic-based reaction. The selling has been very steady. It's been very organized. You don't get that sense that the bottom has yet dropped out of the market. So I think markets could be under pressure for some time still. The problem is that you just don't know, and what you do know for certain is that you're seeing a lot of shares at a lot lower prices than you could have had them even 6 months ago. So if you're looking at some of the high-priced or the previously high-priced tech stocks like Zoom, I think they're reporting today, things like Nvidia, their share prices have been punished so hard that there definitely do seem to be a few opportunities. You don't know when they're going to turn, but I think it's definitely time to start having a nibble for the savvy investors.
So I mentioned that on Sens we had the likes of Discam and Netcare release their financials. Which one of the two do you want to start with? Let's start off with Netcare.
Okay.
What did you make of the figures? I mean, they seeming to be seeing margin recovery. COVID-19 is receding. Has that helped them in the sense?
Absolutely. So you've got to remember that it's the third largest hospital group in South Africa, and you mentioned margins. So margins are made up of essentially, can you charge more, and how much is your cost base changing? So what happened under COVID, obviously, with all the elective surgeries being cancelled, they saw far less beds being essentially rented out. That put revenue under pressure. Now that is the one half of the margin equation. On the other hand, you also saw the need to go and change the type of protective equipment that staff were wearing. You had this big increase in staff costs and equipment costs as well. So that's really where the margin compression came from, and that is starting to normalize. So they're seeing more elective surgeries. Omicron has obviously been a lot less fierce, and that has, I think, helped with just regular surgeries getting back underway, and that's helping to boost the numbers. So I mean, a decent dividend declared at the interim level, but I think it's a difficult environment still. But definitely seeing a recovery from that COVID period.
We were talking off air about Discam's earnings. What did you make of them, given their PE?
Yeah, well, their P is high. Like, there's no question about that. So if you look at a trailing 12-month on Dis-Chem, they're sitting at about a 34 price earnings ratio. Now, they did manage to grow earnings around 30%. So that's, that kind of justifies the share price. It's why you're seeing the share price up on the day. But you look at it in terms of revenue, they're almost to an extent buying earnings and revenue, because they've obviously merged with Medicare as well. So they've added a lot of new stores. So if you go down to the comparable sales numbers, which is, if you just look at their revenue number, revenue growth there is about 6.1%. So you're seeing about a 6.1% increase without the acquisitive activity. Now that's showing a business that's in a little bit more of a tricky position. So I do think, though, that they have also obviously rolled out insurance. There's a lot of good things going on at Dis-Chem, but it's a pricey share. But so far the earnings are justifying it. But I think read it carefully.
All right. On that note, we're going to leave it there with Gary Boyson from Rand Swiss. And as he mentioned, the likes of Zoom and NVIDIA releasing their earnings, as well as the FOMC minutes on Wednesday that we'll be unpacking for you on Thursday. But that is it for me. We're going to take a quick break. When we come back, we'll have more news for you. So stay tuned.